The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. What are we doing here? Oh, just taking a quick look at some stuff. Up 13 points on the S&P cash. And what else do we have? 156 higher on the Dow. Nasdaq's up 50. Got to make this a little bit bigger out here. Russell up 18.8 points. I'm showing crude at 76.70, up 2%. Is that right? Anyway, we'll continue to keep an eye on all this stuff. Okay, and well, we always like to come to you at this time.
Following takes place between 2 p.m. and 3 p.m.
Did you hear that? Man, that was quick. That was pretty quiet. I'll have to go find out why everything. Although I'm pretty sure I know why everything changed. We'll worry about it another time. I probably have to reset my levels now. I updated my machine last night with the October update from Microsoft, and everything seems to work good, except some of these settings on audio get reset when they do have these major updates every couple of years. Anyway, what else do we have happening? Well, I want to get to the first thing that is the most important thing, and then we'll go on to a few other things. But it's certainly for me, is the TLT. We've been waiting for this thing. I thought it would gap down. It just kind of rolled down after this morning. We're going after the February 21st low in the TLT. That's 114.39. Got to 114.67. Let's see, what is it now? 114.71. And of course, so that, what are we, 30, 40 cents off that low. The question is, what do we do with that tomorrow? It would have been nice that we had already challenged that and either broke it or bounced off of it. Again, 10 million shares, that's going against a low with 12 million shares. My guess is that we will have those 12 million shares before the end of the day. In fact, we just made a brand new low in that TLT. Now, the big question is, what is the market going to do with that? We were talking about it in the Tiger's Den just before lunch. And I always remember one of the quotes from James Carville, who was a political henchman in the 90s. You may remember him. His wife called him Serpent Head. They're still married, too, which is kind of interesting. But he said that if he got reincarnated, he always thought he wanted to come back as a 400 hitter or ladies' man or all kinds of stuff. But he said the one thing that you want to come back as is the bond market, because the bond market can intimidate anyone for any reason. And that's true. Now, the question is, what's going to happen now that we've got this kind of movement in the bond market? Is that cash going to leave and go into the equity markets? Is it going to run scared? Generally, there's some themes about this. And I really came to roost in 2008 and 2007. George Granville, God love him, was right a couple of times and wrong 98% of the other time. But he had a theory, and that theory was that everybody runs to the back of the Titanic when it's sinking, but eventually it all goes down. And one or two things can happen, and that is that people start figuring out that they sell what they can, i.e. the equities are still high. Let's sell that. Let's not sell what stinks, which is maybe these treasuries or bonds or whatever. Let's sell what we've got that actually is doing well. Of course, that's almost always the worst thing you can do for a trader. You sell your losers and hopefully keep your winners. But that's it. We're looking now over the next couple of days about two things, and that is what does happen now that we've hit these lows? Does it instantly have a bounce? Well, we quite haven't hit these lows. Let me put it that way. But what happens? Where's that money going to go? People are selling it. They are going to get something back. They may not get as much back as they had at one time. They may get a lot more money back if they've held it for 10 or 20 years or whatever. It may have been well worth it. But the value of these things are changing, and they are selling them. There should be cash on the other side of that. What is happening to that cash? Now, one of the other things that we've seen a little bit different out here today with the Russell being up 19, we've got a little bounce. Pretty much everything that looked like the only kind of trend that I could see in the markets was that anybody that possibly could need a dime and need to borrow it were the stocks that everybody was hammering yesterday. If you had $200 billion worth of cash around the globe that you're going to bring back, Apple, we're probably going to go higher. Certainly not going to go very much lower. Boeing, any of these other companies with massive amounts and hordes of cash, not much happening. But you're a small, medium cap company that needs a lot of money to grow. Man, they were selling you yesterday. It was being repriced, especially companies with lower profit margins like retailers. They got smacked fairly badly. Not that much of a change today. There's only one set of retailers doing better than that. We're going to get into it. But one of the competitors to this sector went bankrupt. So everybody's looking at this sector going, well, it's got to be good. A lot of times when your competitor is going bankrupt, all he wants to do is have a job for another day. So they continue to sell things at a loss. And that really kind of stinks up the market for everybody left in it. So finally, when they go bankrupt, everybody has a collective applause line. And we're seeing money come back in. Something that most people wouldn't think about, which is this bedding sector. Bedding, bedding, i.e. mattresses. And of course, it's the mattress company that went bankrupt. Mattress Firm, I think is the name of the company. But that tells us that we've got a lot more stuff going on, like Lazy Boy up almost 3%, Sleep Number up 5%, and the big winner of the day is Tempur Sealy International up 11%. Well, maybe we'll take a look at those charts. I don't know if that matters that much today. Other retailers, of course, getting smacked around yesterday. All of them found an air pocket, but again, not much going on. What else do we have going on? That's about it. We'll do a little history. When we come back, we got lots of charts to look at again. And some of these stocks, even though the volume's light, especially in these small to mid-cap stocks, went lower yesterday. So we'll take a look at them. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, always put a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And what else do we have going on? Well, we got the presidential alert. You can't turn that off on your phone. There it is for the first time. Presidential alert. This is a test. You'll all get it if you've got alerts turned on. I shorted alerts, but it didn't seem to go very far. Okay, so what are we talking about today? Well, where's it gone to? I was going to play it, but I guess I turned it off because I wasn't sure that I was going to get my audio levels all set up. I think they're still way too low, but why don't we go ahead and try it anyway?
And it's all just a little bit of history repeating.
Sound a little better here anyway. It is history repeating, or at least rhyming. On this day in 1950, U.S. Patent Office issued a patent to John Bardeen and Walter Brattain and William Shockley for the transistor. 3 AT&T Bell Laboratories researchers had successfully tested the first of their devices 2 years earlier. The transistor started a revolution in computer engineering that led to the development of the semiconductor microprocessor and integrated circuits common in modern computers. And of course, today we look at the next big movement in technology, which is MEM resistors. Intel and Micron working on that. Much faster than most memory in the past that was based on transistors of one form or another, but probably is it's probably going to be the biggest thing in the next 5 or 10 years in computers for classical computers, with of course quantum computers just starting now to become useful for certain purposes. They won't replace all computers. And of course, if you've never heard of infighting in a company, the infighting that happened around this patent is legendary. The William Shockley guy kind of started off and showed how to do some of this stuff. These other two guys went off and actually made it work. In fact, the first transistor was not practical, but shown, I think, in about 1924. So it took them about 26 years to actually make the first practical transistors, and volume really didn't start picking up till about 1958 because of IBM computers that started using transistors. But there's quite a few documentaries around about the particular infighting around this. Shockley believed that it was all him, and the other two disagreed. But what can you say on this day? So let's go ahead and start looking at some other charts. In fact, let's just see if there's anything big going on. I don't think the amount of betting, not betting, M-E-D-D, or what is it, betting, B-E-D-D-I-N-G, betting, has really changed much. So you just got a bigger slice of the pie left over. But on a day where not much is moving, and actually in a kind of a part of a market that has been weak, with housing sales moving lower, certainly, you know what? At least not that bad of a day. Certainly don't have the kind of juice that you would want in Lazy Boy. LZB is the symbol on this one. Up, man, I mean, you kind of came down with fairly hard volume. You had two big spikes, and this thing just rolled over. Not a good sign out here for Lazy Boy. SNBR is the other one in this sector called, or another one in the sector called Sleep Number Corporation, up 5% on the day. This one was starting to get a fairly decent pullback. Again, the big winners of this up 5%, 350 million, or no, 350,000 shares. But when you look just a couple of days ago, it was down on 500,000 shares. So even though these things have bounced, and maybe bounced because the short positions in them, I don't know if this is actually changing this sector at all. In a week or a month from now, is it going to make any difference? I think it's going to all be about housing sales, because every time someone moves, I think they're 10 times more likely to buy a bed and throw the old one away. They always ran that scam, which is your bed weighs 10 times more than when you bought it 5 years ago because your dead skin cells are on it. And you know what? I picked up beds, and they all seem about the same heaviness. I always wondered if that was true or just one of those things that they tell you to actually sell beds. But and of course, they try to gross you out with all the dead skin mites crawling everywhere. You know, if you sleep, I guess it works, right? Anyway, nice pop higher on this one. That's up 11% as we speak, 53.62. But again, right back into this line that is going to act as resistance that pretty much came down on September 6th, 774,000 shares. You had a few days out here, maybe 1.2 million shares. This one is the best, though, and of course, the one that's moved the highest, 11% higher right now. But certainly still into that line, 2.2 million shares. So some decent volume, maybe the pick of the litter, but man, nice big gap out there to get filled if anything continues to degrade the housing market. And in fact, I was talking earlier in the day to Jason, who leads us off at 8:30. We were talking about some of the things surrounding bonds and other issues. In January, I talked about this Vanguard REIT ETF, which is incredibly sensitive to how bonds and what they sell for, because almost all these things are a house of cards based on it. The biggest losers in the 1929 meltdown were these REITs. The biggest loser in 2008, for the most part, as a category sector, was REITs. And that's because these things are incredibly leveraged to that. Now, we've moved down a little bit more in this VNQ. Some people like some other ETFs. This one I kind of like. Now, you're down into this previous low of $78.85. This is the July 30th low, had 4 million shares. Well, you got 4.5 million shares already. You bounced into it with almost 9 million shares on the 26th of September. So we knew we were probably going to come back down into this range and at least test it. And the question is, does it break this today or does it break it tomorrow? I've always thought that we were going to wake up one morning and these things were all going to jump, actually break through ice or jump the creek. I always get those behind. Seems like jump the creek connotes higher, right? So break through ice, down below, and then fall into the drink, as it would be. 78 to 85. So we're just a couple cents from that. Same thing with the TLT. Well, we're almost there. 114.53. We'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a question from John in Sarasota. And why is this new memory technology going to be such a big deal? We've talked about why Bitcoin, one of the biggest expenses, is always the energy that we expend trying to mine Bitcoins. It's basically turning electricity into money. And hopefully you turn it into more money than you pay the electric company. And that's why these things do so well in climates where they have a lot of hydropower and it's cold, so they don't have to spend a lot of money on air conditioning. Now, we're approaching where half the computers that people have aren't computers on people's desks anymore. I'm not talking about phones. I'm talking about real computer servers. And, you know, for especially the United States, you know, there's not a lot of call for a lot of those servers at 2 a.m. in the morning. But sometimes there's a lot of call to have servers actually spin up a great deal during new ads for products. And of course, Amazon and Microsoft with their Azure product and Google all have these on-demand systems where, you know, things start getting busy during the halftime of the Super Bowl. Well, you need a lot of servers online. The idea is with this stuff is it's not only a lot faster, but it's non-volatile. So you could turn off certain servers and let them sit there idle, but in a second or two, they could all spin up and be running like they just booted. And that's really the dream of Intel and why it kind of bounced the last couple of days. They start selling these motherboards that will allow them to have almost instant on capability and turn off or go idle without much. But, you know, you literally, I think they're saying in something like in the neighborhood of 2 seconds, you could put a server back online that was at idle and not really pulling any power. And that's it. You know, once you buy all this stuff, the big expense from now on is how much electricity does it eat. And these new technologies not only are faster and better, but they allow you to have kind of an instant on or instant off ability depending on your load. And if you're a big company, that can be a lot of money. And certainly if you're Amazon, if you can offer that service and maybe scale it to the minute, also maybe a reason that people pick you over, you know, one of the other companies. So interesting. Anyway, we'll take a look at Intel in a second. Anyway, Micron was up. I didn't like the way this thing opened up and then rolled lower. It's still kind of a little bit, of an ugly candle when we look at it. Hang on a second. What did I do here? Okay. Do I need to go lower? What's it doing here? Oh, typed in the wrong thing. Okay. You know, you gap down with a lot of volume on the 21st. You've been kind of coming back up very slowly into that gap. That gap came down with 97 million shares. Today, you're into it with 22.8 million shares. So fairly light volume. And I can say that probably the reason is why both of these companies are making this new memory. If you're Intel and you've made a deal with Amazon or Microsoft to buy a bunch of these servers, you're probably going to make a deal with them to buy your memory at the same time. So it probably is a little asymmetric when we look at who gets the deal. Intel, by the way, is the biggest manufacturer of memory in the world. Most people think when they think memory, they think Micron. Still a big manufacturer, but nowhere close to Intel. Samsung, the rest of these guys, they all pale in the shadow of Intel of kicking out memory. Here's Intel, though. It's come back up into this gap today and rolled back right above 49. At least, you know, yesterday you had some fairly decent volume, 40.6 million shares. Today, 27.1 million shares as you went into 19 million shares on August 29th. But of course, you gap down on about 28 million shares on August 10th. So you're kind of started on the way back up, as we said last week. This had been one of the stocks that had gotten some of the worst, I'm going to call it propaganda that I'd seen in a long time. But you know what? It's not the first time this year. We talked about early in the year a great deal of, I'm going to say, misinformation about processor vulnerabilities. And here it is, what? We're in October, so we're 9 months along, and still no one's shown anybody has lost any data with any of those things, but they were the biggest things in the world. I struggle to always explain it, but it's kind of like this. Good hacking tools kind of cut down the amount of data you have to sieve through. Kind of like having salmon come up the stream. It doesn't take a whole lot to put a net across the stream. But if you're looking for a bunch of fish somewhere in the entire ocean, maybe you put in your net, maybe you get some, maybe you don't. And the hackers are kind of sharpshooters. They know how to get what they want, and putting out a big net in the middle of the ocean isn't a great way of doing it, which is kind of all the vulnerabilities that everybody talked about early in the year. AMD got a little less of this shade early in the year. Today, it did go back down to 26.54, got back up to, what is that? What is that, 28.5? In fact, let's go ahead and take a look at that. Some fairly hard articles out about it today. It's off 2.5% at 28.34. Very, very tough articles about it. It certainly is hard to explain a $34 valuation on AMD, other than the fact that it's kind of an Apple and Android thing when it comes to phones. And the AMD people are very vocal about AMD and how Intel's truly evil. I've never been a big fan. AMD occasionally comes by and decides to make a processor and sell it dirt cheap, and then everybody, of course, loves them that buys these. But is the long term around AMD going to be anything? Man, I always hate when a company's big in two different areas, and neither one of them are the leader in that business. AMD has basically 30% of the video card business, with NVIDIA 70%. When it comes to processors, AMD, I think, has about 20% of the business, between Intel with 80%. In the server market, Intel has about 99% of the server market, with AMD with about 1%. So it's always the second banana. Anyway, we'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And of course, this has been fun buying. Not fun, F-U-N, fund, F-U-N-D, buying. And probably not a bigger cloud over our market than when the market sells off during fun buying, when all this cash is coming in. People are selling into it as fast as they can, hand over hand. But of course, the market has now been officially spooked. The TLT blew through the lows. 114.53 is the last quote. We got down to 114.24, which is now going to blow away this February 21st low at 114.93. This opens up the next two bigger lows at 112.09, which is the March 13th, 2017 low, and then the December 16th, 111.57 low with 16.6 million shares. So I thought that what we would see is the bond market roll and people go into equities. That was the Joe Granville thing, which is if you're in one thing and it looks like it's going down, you hop to something else. Unfortunately, eventually, everybody's on the back deck of the Titanic, and you know it's going to sink, and everything's going to go lower together. Now, you know, you should actually sell, of course, the weakest thing when you get stopped out. But one of the traits of markets where there's a lot of losses is always people, one, not taking their stop, and secondly, people selling their winners and keeping their losers, and just continue to lose and lose more. So just keep an eye on that. We'll see what happens at the end. We're only up 4.5 points on the S&P cash. Dow's up 77, NASDAQ's up 32. I was hoping that we'd get a very good signal in the S&P, which was a test of the 2941 high of a few weeks ago, but I don't think we get it now. If this is it, maybe we get one more little pop in the market. Maybe tomorrow some people come back in with some late cash from fund buying. But by Friday, things are starting to look a little cloudy. Maybe a chance of thunderstorms, maybe a tornado. Don't think a hurricane, but certainly the weather forecast is not looking good for the next 2 days if we cannot rally into fund buying. We're still higher, but 4.5 points is not anything to write home about. Now, we normally talk about the volume. In September, we pretty much start the show off with about 3.4, maybe 3.5 billion shares a day. If you wanted to look at some kind of average, volume has picked up this week. we've had kind of a net move in the market, not higher or lower, depends on which sector we were playing whack-a-mole that day. Right now, with an hour and 15 minutes left to go in the day, we've already got over 5 billion shares. So we will have some fairly decent volume by the end of the day. If the market does once again turn lower, we have to start thinking about how people are reacting to that bond news. And I wouldn't be surprised to see people trying to buy it off these lows, at least for a day or two, thinking this is it. But man, we're going to break it. We're going to break it with volume. We're going to break it with energy. The energy off this 122.65 high of July 6th was slightly more than the volume to it that started on February 21st. So we had a nice big move. This did have one more rally attempt back to the 23rd of August, but since then it's been on a selling, what I'm going to call it, a rolling auction, and the crack and the break today. So we'll see, probably get a little bounce out of here, but it may not take more than a couple of days for us to start really looking at this and start thinking about these lows at the 111.57 of December 16th, 2016, and that March 13th low in 2017 at 112.06. Okay. What else does go on? Okay. So we looked at MU. We looked at that. Let's see. I got some emails here. What do we want? I'm looking at your chart. I can't find how you display the neat little black top and the volume short. Thank you again. Preview. Yeah. Okay. Nancy asks about how I put in the volume for the shorts each day. I call it kind of like matchsticks because it's just like the little tip of these things. I'll have this little black on them. I'm putting my mouse over it now. I actually built my own database because there's not an easy way to get it. There are some systems that actually will report it, but it's not actually correct. The FINRA site puts data in like 4 different files, and you have to go back and consolidate all of those 4 files and add them together. I just do it and add it and put it in a database and then dump it out each night so I can look at it. But nobody actually is a data company. And of course, they have data agreements, and they'll chase you around with a stick and a handful of lawyers if you decide to go distributing your own data. I can certainly show it with no legal implications, but you know, it's in my newsletter every day. I do it on my show every day, but that's just the short volume. But you can kind of see it in that, but you have to add it up each and every day. So I wrote a database. I have to every night update it and then check it to make sure that nothing's happened slightly different. In fact, just last week, they made a change in the way it was, so I had to go back and audit it. But it's all correct now. But yeah, you don't get that data until about, I don't know, 6:30 or 7 o'clock at night. But at least you know from yesterday what people were doing and how they were going short. But we'll move on. Anyway, that's Nancy from Washington. Anyway, is there anything else? Yep, that's it. Okay, let's start looking at some other charts to see. Did I got to put that back up? Looking at some of these stocks, as we said, a lot of them, I was expecting a bounce this week. I thought that as the bonds sold off, that money would come into the market. It has not. So instead of trying to double up on my position of being wrong, I've decided to be right, and I'm short today. We'll see how that one works out. But a lot of these stocks did come down with lighter volume. So normally you get a bounce out there. We just got a lot of selling yesterday into it. ACCO Brands, ACCO, again, retail has been taking a beating. You got a little doji out here today at 11 bucks. going back in to test this February 6th low of 2018, 600,000 shares compared to, but we already have like 500,000 shares yesterday. Pretty light volume on a doji, just 255 today. We'll get through a bunch. Well, we won't get through that many more stocks before the end of the day. Again, keep an eye on the skies and that TLT, because it's going to tell you what everybody else is thinking. 114.65.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And TLT 114.67. That's probably the best thing for me to look at. Get a kind of a composite view of the world. And of course, the fear always in a market where the TLT is going lower is the inversion of the yield curve. And so far, doesn't look like that has been quite the issue when you look at like FAS, say. Take a quick look. You've kind of pulled back, but you're actually higher today. Not a lot of juice, though. Kind of interesting out here, and it may. I think this is what we're going to see tomorrow. There's going to be a lot of decisions in this sector about what to do. Now, I can't say that there's been a lot of volume one way or the other to really say what's going to happen, but you have come down from 78.35. You got your bounce today on the break. You got a little hammer out here today, but this kind of has the little whiff of maybe a more and bigger trend. Your next big support level is at 58 bucks in FAS. So keep an eye on banks. That'll be an issue. We've got a lot of other stuff going. Wanted to go back here one more time. We're almost red on the S&P cash. Again, that's got to be one of the worst things, is to go red on a fund buying day. Dow's up 55. SP's just up 1. NASDAQ's up 24. So keep an eye on it. These are kind of days where if you can't go higher, you got fund buying. Watch out for some big fireworks kind of close to the end of the day, because a lot of times, as we've said for the last few days, there's been a huge amount of shorting in this market. Maybe somebody knows something that I do not know, but they are getting extremely bearish. Extremely bearish. In the meantime, sell when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.